feel free. Obviously, like I said, this is me and you basically. So
Okay.
just trying to explain a little bit. So when your clients ask you questions, hopefully, obviously you say, hey, talk to Meryl or Tammy. But as far as how scores, like that's the $1 million question, how credit scores are, where do they come from? How are they affected? What's involved? So what we find is a lot of times people saying, hey, my Credit Karma score is this. I pulled my free credit report, it's this. And as you know, mortgage scoring is much different, right?
Okay.
So we have Equifax, TransUnion, and Experian. Obviously, kind of the more risk, the debt that you're applying for, the credit you're applying for, is going to have more strict guidelines. So let's say, people are going to get a credit card. Well, that's not as risky. So they're going to get a higher score. They're going to next kind of level is your auto loans, or when they're checking you for car insurance or home insurance, they want to check your credit, but they're not going to quite be as stringent as we are. So the mortgage companies, of course, have a much bigger stake in the game. So that's why a lot of people say, gosh, my credit score was, a 720, and you're telling me it's a 670.
Okay.
There can be a huge swing in scores. So that's where, when people say, I don't want you to pull my credit, but Credit Karma says it's this, that's when I explain, hey, big there could be a big difference here. I don't want to misquote you. So let's get an idea of your actual mortgage score.
Okay.
So that'll bring us to our next slide. And Amber's driving, so I'm giving her my cues. So here's what's in your FICO score. Here's what makes up the score. So obviously they're looking, mostly at your payment history. And what I always try to explain, it's not just your ability to pay, it's your willingness to pay. So we get, believe it or not, we have a lot of clients, just, over my career, they make a ton of money and they may have, a 30-day late payment on a $20 credit card. Maybe they were on vacation or they forgot or something. So it's ability to pay, and then that's your debt to income ratios, and then your willingness to pay and pay on time and responsibly. So, we're looking for what are your patterns? So again, payment history, biggest thing, amounts owed. So that's another huge thing, where we'll get into that a little bit later in the screens. But your available credit to your credit usage, that plays a huge part in your credit scoring. So we'll get there. Length of credit history. How long, have these accounts been open? Are you just like opening stuff to get, 20% off at a store, you pay it off and close it? Or are you building a history? So, and then credit use, do you actually use, and what type of credit do you use? And then new credit, are you just going out there opening new stuff all the time, never, kind of using it in the way that it was meant to happen. So with that, Miss Amber, thank you. And then another thing is, I'm sure you've heard of Experian Boost,
Hmm.
where people can boost their credit score, which is great, again, maybe for consumer debt, but it does not help you on the mortgage side. So
Okay.
people who are doing this is they're reporting their utility bills, their insurance, anything to give them kind of that history and that payment log. We don't count that in our model. So that's just something to keep in mind. Now, Experian does look back. They look back 24 months. You can kind of put any of these things mentioned below, mobile phones, cable, utilities. It's not going to help you on the mortgage end. So that's just something to be cognizant of. If your clients say, oh, I've done Experian Boost and my score's gone up 60 points, we might not see that reflected on our end, because we're going to go in and actually remove all of those accounts from the report when we pull it. So
Okay.
keep that in mind. Miss Amber, thank you. Okay, I got to put on my glasses for this one. So
Yeah,
this
me.
is, don't hold us to this exactly, Mike, but this gives you a good idea of kind of what we look for, what kind of points this gives you. So the number of bank credit cards that you have, the main piece we're looking for is 3 or more. That's going to give you the most points. As you can see, it gives you about 40 points. Now, that doesn't mean that 2 knocks your score down 30 points. It just means that having 2, you are kind of leaving possibly 30 points on the table. So again, our job is not to say, hey, go open up a bunch of credit cards, but when we're trying to build credit for a client, we do want them to get at least 1, which will give them, about 20, 22 points. And then we can start building a history with them. So that's what you're looking at. 4 or more, you can tell starts to actually hurt your score a little bit. You're still getting 30 points, but not the optimum amount. Number of inquiries in the last month. So 1 is going to get you the most points. So obviously we want to see, or I'm sorry, 0 is going to get you the most points. We don't want to see that you just, depending on credit for everything. And if so, the other question is, if I pull a credit report and I see 2 or 3 inquiries, of course, we have to ask about that, because now if it's a mortgage inquiry, we understand they're shopping for mortgages. But anything else, we got to know, because there might be a debt that hasn't reflected yet that they just opened that we need to consider. And that's happened before, where somebody just bought a car, but it's not on their credit yet. So that's something during our process that we always say, hey, please explain these inquiries. Did you open new credit? If so, what's the balance? What is your payment? So that's going to be huge. And then the next one, oh, and let me just circle back. Major question we always get. I don't want to have my credit pulled for a mortgage. I don't want it to affect my score. Pulling a mortgage score is only going to hurt your credit by maybe 3 or 4 points. And that's one time. So if they have already talked to, yesterday they talked to one person, they call me the next day. They have a 30-day window that they can have as many mortgage inquiries as they need to, and it's only 1 hit. It doesn't hit each time. Okay. So do you have any questions at this point?
I don't think so. I've got just my personal situation. I've got 4 credit cards.
Okay.
3 of, excuse me, 3 of them that I use, and 1 that I only use about every 3 or 4 months to keep it active.
That's okay.
So if I wanted to be optimal, it sounds like I need to cancel that card.
No, and we'll get
No.
to that. Okay.
Okay.
So actually let's go ahead and tackle that now.
Okay.
So one thing that people, and I'm glad that's like a perfect question. So think of it this way. If you have 4 credit cards, and I'm going to do some math here. If you have 4 credit cards, okay, and let's say you have $1,000 limit on each one, okay, that means you have $4,000 of available credit.
Okay.
If you have a balance on 3 and no balance on 1, and let's say your cumulative balances are, say it's, 1,000 on all of the other 3. So that's $3,000 balance of a $4,000 available. So you're at 75% usage, right?
Okay. Okay.
If you cancel that, if you close that other card with the 0 balance, you're now at 100% usage.
Okay. I see.
So never, ever, ever close a credit card.
Okay.
I
That's
mean, unless you're just, you're not worried about your score in the next bit. So that is a huge thing. People say, oh, I'm going to pay off a bunch of stuff and then I'll apply. Whoa, 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 whoa. That's fine. Let's talk this through. Do not close any revolving debt.
okay.
Okay. So again, because that's your availability to your usage has a huge point. And you'll see this on this next slide, maxed out cards, which again, I'm not
Okay.
saying you're maxed out, but it's just that ratio that we're looking at. And typically they really want to have you 15% usage or less. I know sometimes that's not, realistic, but the higher you are to being maxed out, the more it's going to hurt you. Does that make sense?
Yes, it does. Thank you.
Absolutely. So, and the strange thing is, and I call unfairness on this, but you'll see if you've got a credit score, say 680, and your cards are maxed out, it's going to hit you 10 to 30 points. Look at what it does if you have a higher score, which seems weird. Like, why should you be penalized more with a higher credit score? I don't know if they just expect more from us or,
Okay.
but that's how it is. So maxed out cards, that's huge. A 30-day late, you can see that's going to hit you 60 to 80 points. If you're have, average to good credit, excellent credit, that's a huge knock. So, the other thing that debt settlement, that's another big one that we see with people who have collections. So any collections or accounts that are maybe in dispute, what happens is the score on the disputed accounts, the bureaus take that out of the mix if it's in dispute. So if somebody undisputes that, which we have to have it undisputed to move forward, that could totally mess up their credit because now it's a derogatory again, where
Okay.
it's kind of when it's disputed, it's kind of frozen. Okay, so we have to, that's why we dig so deep in these credit reports. Same with, debt settlement, paying off collections. It's a good thing, but it starts the clock again on the date of last activity when you pay something off. So we have to be really cognizant when we're looking at things, how to advise to either pay off a collection or just let it ride. Okay. So, and then obviously your foreclosures, your bankruptcies, those are huge. Those are going to take you. And then of course we have guidelines around that. So those are your damage points. So couple of things, collections remain on your credit from the date of the initial missed payment. Paid collections are simply marked as such on a report. So even a zero balance, still going to show and hurt your score for 7 years. Okay, back over to that other slide, please. Thank you. And then charge off, same thing. It's one of those things that if they were to go in and pay on that collection or start to pay, they would never pay on a charge off. It's been charged off. But if they try to get on a payment plan or something, that starts that date of last activity all over again. So these are the things when people call in if they have questionable credit, and sometimes I'll say to you, hey, got a couple of things we have to work on. It's usually clearing up collections, getting to the bottom of that, especially if they're over the margin of what's acceptable on collections. We can go up to most programs $2,000 in collections and just leave it alone. If it's more than that, we have to come up with kind of a solution to get that number down. So these are huge things that we can have a score that's acceptable, remove a dispute, pay off a collection, and it could adversely affect us. So, and then closed accounts. So these are no longer, like you just asked about, no longer available for use, but they could still stay on your credit for 10 years. If there's a delinquency, that will still stay on there, for 7 years after you close that account. So, things don't go away on your credit report all that easily. So,
Yeah, right. Okay.
yeah, yep. So next slide, please. Okay. Let's see. Credit scores, what I want to. Okay, lost credit cards. If no delinquency, those reported lost will continue to be listed for 2 years. Whoops. And bankruptcies. That's okay. And then bankruptcies. So again, different scenarios for different loan programs. Chapter 7 is when I'm sure you're aware of these, so stop me. Chapter 7 is it's just dismissed, right? Chapter 11 is a payback program. So different guidelines. FHA, we can do a loan after a Chapter 7, after 2 years. And we've sent you, I think, that grid. I can resend it to you with kind of waiting periods. Sometimes we can do it after 1 year with extenuating circumstance. Now, extenuating circumstance is not I lost my job or I got, divorced. It's a death, it's something catastrophic. So, and then, tax liens. So those are no longer reported by us, by the credit bureaus. Those used to be, but they're not on there anymore. But that's something that could be found when we pull something that's called fraud guard. So after I send the loan to setup, we could pull that if they have a tax lien that's it got to either be paid in full or they have to be on a payment plan with the IRS and have at least 3 payments made, and they cannot pay all three at once. Okay, so it has to be 3 consecutive payments that are made for us to move forward. Okay, now you can go to the next one. And then, of course, identity theft. This is something that we've just started circulating out to all of our clients because there's so much fraud, and just ways to keep safe. Amber, if you want to jump to the next one. So these are something we always tell people, hey, when you're done with this, mortgage, put a freeze on your credit. If you know you're not shopping for anything, this is what I tell my family, my friends. Guiltily enough, I just froze my credit last week. But I just started trying to really stress that. We have a system that will let us know if any of our clients get their credit pulled. So that's a good thing. We know that they're shopping for a mortgage. It'll say mortgage inquiry, or it'll just say credit pull. So now what we're doing as an extra level of service is saying, hey, Mr. Smith, I just got an alert that you had your credit pulled with all the fraud. I just want to make sure this is you. If it is, terrific. If not, I just wanted to make you aware. And oh, by the way, if it's for a mortgage, how can we help? So, so we use that as a way to kind of reach out, but also that we're offering this service to them. And then another important thing that we're sending out to everybody on every time we get a new client, I socialize this out to our database. Amber, if you'll flip to the next one. Nope. Oh, sorry. One more. Is how they can opt out. So another thing that we're getting, Mike, is we used to be able to, when we were about to pull credit for a client, we could just take the email address out and that would kind of ensure that they weren't getting bombarded once we pulled their credit. That's not us. Trust me, we don't want, an announcement made that Joe Smith just applied for a mortgage. It's the credit bureaus. So the credit bureaus now I don't know if they're trying to pass something against this, but I can have a credit pull for a client and a day or two later they'll say, did you sell my information? I am getting bombarded by every mortgage company in the land. So what we're trying to do is let them know, if you'll go to the second one, this opt-out screen. The problem is that we just found out they have to do this opt out at least 5 days before they apply for a mortgage. So if you send me a lead, I'm not going to say, hey, do this. I'll talk to you in 5 days. Right. So I've put this on social media. You may want to clip this, put it on social media, put it on, anything. This is the only way we can avoid them just getting bombarded with lenders. Just like, when they close a loan, every mortgage, insurance company in the world, mortgage life insurance, you get mail for everything. This is kind of where we're at now on this front. So,
Okay.
yeah, so just a good thing to pass on to your clients or friends and family. And then, of course, the do not call list as well. And then here's just some websites that we share with our customers for, if they want their annual credit report or have any issues or any questions. So I think, Miss Amber, yeah. So, I mean, there's so much that goes into the credit scoring model, and people always, kind of say like, how do I figure out like why is one score this and one scores that? It shouldn't all three be the same? And one would think but sometimes you could have, like when I dig in, I can see maybe only two bureaus are reporting something and the third one isn't.
Mhm.
So this is why it's so crucial for you as a realtor, as you do, you, you send them to us first, right? Let us weed through this because, and some people, believe it or not, have no idea what's on their credit. They
Right,
really don't. And it's something that I really think they should be teaching in high school or in college.
right.
Just what is your credit score? And a lot of people think like, oh, I just don't want to use credit. We can use what's called alternative credit, but in this day and age, you got to have credit. You got to have some credit.
Mhm.
So, we'll advise, let's say you bring me somebody and they have no credit. We'll say, hey, get yourself a secured credit card. We're not telling you to go spend more money than you normally spend. Go fill your tank, use your credit card, get in your car, transfer the money from your bank account directly to the credit card. And let's just do that for a bit. And we have a great kind of intel system that lets us know that we can go in and see, okay, if this person adds one card, two cards, where will we be in 30 days? Where would we be in 60 days? So it's called a Wayfinder, and it's a great tool. And Tammy and I are big on using that. Amber, cover your ears or don't tell Dave. But we try to use this. Let's say we have somebody with a 690 credit score, and we see on their credit report, it'll give us like a plus 20, a plus 40, plus whatever. They have the potential to raise their score by that amount. So we'll go in and look at that and have a conversation because that getting them up 30, 40 points might give them a better interest rate, right? So
Okay.
we're always looking at ways that we can make ourselves, more than order takers. Like we're trying to get you the best that we can. Here's how we can do it. And then same with people who I had a client last week. I've never seen a credit score so low. I don't, Tammy and I said, I think you have to really work hard to get that,
Mhm.
but we didn't tell her no. We told her not yet. And then we mapped out a plan with her. Now it may take 12, 18 months, but
Mhm.
if they're willing to do the work, we're willing to come up with a plan and help kind of coach them. So any questions or concerns or ideas or thoughts?
No, no, it's good information. I appreciate it.
No, absolutely. And don't close that card. So, oh,
And
another
oh,
big
and just a
thing.
side
Yeah, go
note
ahead.
too, sorry to interrupt, but also to Mike, whenever they have clients that are under a 580 credit score, those clients are automatically um added to a credit repair campaign that is dripped out each month so that, Meryl is staying on top of those clients that you sent over that she may not have been able to convert at that time. So it keeps, you guys top of mind. I just wanted to throw that out there.
Thank you, Amber.
Okay.
And that same system that I told you tells us when somebody had a mortgage inquiry, it'll alert us when they have a credit improvement. So, again, it might be, hey, Mike, I can't do anything right now, but let's put it in the pipeline for down the road for sure. And then another important thing just for any kids or family friends, installment loans. That's something that the credit bureaus that does help a lot. Now, again, you might think, oh my gosh, but if you buy a car, your balance is going to be high and stay high.
Mhm.
But again, that's a better indicator almost for us that you're paying as per the contract
Mhm.
monthly on time, same amount every month. So that's kind of, and it's people that don't have an installment loan, sometimes that can actually be a negative on their credit.
Okay.
So, so anyway, we are always here to help.